Very good morning. Welcome to Chartbusters. Well, it's a good start to trade in the sense you got looking at the yesterday's F&O data from the FIs was that maybe this market wants to defend that lower level of around 17,400 odd. Today we have started off in the green and the first 90 minutes go to the bulls because if you bought at any point of time, the headline index, you'll be making some money and the mid-cap index as well looking far more interesting. Hey, Manglam.
Hi, Nigel. You spoke about the F&O data. Yes, there was a fair amount of short covering, but the 68% positions are still on the short side.
Yes.
So if we continue to see this up move and this continues all the way up to the earlier resistance of 18,100, we could see some more shorts go ahead and cover their positions. The question this time around, however, will be whether we go past the earlier resistance or not. First up, all the top stories that we're tracking today. It's a strong start for the Indian market as global equities rally ahead of the two-day FOMC meet. Nifty moves above 17,850. Banks and autos lead as all sectors trade with gains. The mid-caps outperform.
And Mr. Girish Kowski resigns as MD and CEO of Canfield Homes, citing personal reasons. The stock corrects today in addition to the 8% correction we saw yesterday.
Morgan Stanley issues an overweight call on Astral, citing multiple tailwinds on the back of a possible safeguard duty on PVC resin imports, sets a target of 21.87 per share.
SBI Card on the move. The stock rallies after sources close to RBI say that there is no plan on the table as of now to allow NBFCs to issue their own credit cards.
We do have a bunch of other stocks as well. Crompton approves a sale of 6% stake in Butterfly Gandhimathi to meet the minimum public shareholding norms. The stake sale, to be conducted via an OFS, is priced at 1370 odd rupees at a discount to Butterfly's current market price.
Well, give me an eye on the screen. A couple of stocks are moving around. Dhampur Sugar, well, a promoter holding has moved to around 27.5% odd. They've acquired close to 3.5% stake via the open market. I'm guessing if their total promoter holdings only 27.5%, anyways, it was relatively lower. But for the time being, the stock is moving higher because they've come in there, supported the price and picked up close to around 3.5%. As we speak, the stock moves to the high point of the day. But how do you trade the index? As we mentioned earlier, it's a good start to trade. Shilpa Rao joins us for a technical check. Hi, Shilpa. What's your view? Feeling bullish? If you bought yesterday, you would be happy. But what do you do from around the 17,860 odd mark?
Good morning, Nigel. Nifty, sustaining above 17,800 is a very positive sign for the bulls. You will likely see 18,000 to 80,100 coming in very soon. Likewise, Bank Nifty also is extremely bullish. It has a very strong support at 4,500 zones, and it's just about time that you will see 42,000, 42,300, and then 43,000 levels for the index.
All right, and individual stocks, what do you have on your radar today?
Octopacks doing very good. So one counter that has not yet participated in that rally is that Motherson Sumi. So I am bullish on that counter. It is trading at 125 now with a stop loss of 123. One should look for targets of 131 to 135. And another one is Exide Industries. Exide is having a very strong support at 166 zones. So with that as a stop loss for the day, one should look for targets of 173 to 175 and even 180 positional.
All right, take that point, Shilpa. Thanks a lot for that. With that, we slip into a special segment where we get you a few ideas for profit coming in from our colleagues at Money Control Pro. Sachin Pal joins in with a stock.
Company is Sagar Cement. It's a mid-sized cement manufacturer with an installed capacity of almost 8.3 million tons. The business was largely a south-focused player earlier, but has gradually diversified its presence away from the southern markets and has forayed into the western as well as the eastern markets through inorganic means. The company's volumes in Q1 FY23 came in higher by almost 35% year-on-year, largely due to the ramp-up of the volumes at these acquired facilities. The trend is likely to continue into FY23 as well as FY24 as the utilization rates at these newly acquired plants is fairly low at present. On the margins front, however, the company is facing some challenges. The profitability of the business on a per ton level has nearly halved from last year levels, primarily due to the spike in power and fuel costs. Imported coke and petcoke prices have been the key drivers for the compression in terms of margins. However, considering the current trend in terms of commodities and the correction that the commodities have witnessed in recent months, the business is likely to witness some recovery on the margins front from the start of 2023. On the valuation front, the company currently trades at an EV by 10 of almost 65 to 75 65 to 70 USD, which appears fairly reasonable from a long-term perspective. Investors with a long-term view can look forward to acquiring the stock at current levels.
Thanks a lot for that, Sachin. For the time being, we'll slip into a short break. On the other side, we'll get chatting with the management of Shilpa Medicare. Stay with us.
Well, the stock on our radar is Shilpa Medicare. We have the company receiving an approval from the Central Drug Standard Council Organization, or CDSCO as we know it, for a topical spray to stop bleeding from an injury in case of an accident. What does this approval mean for the company, and what are the prospects for the business going ahead? We have Vishnukant Bhutada, who is the MD at the company, joining in. Thanks a lot, Mr. Vishnukant, for joining in. Just wanted to know, what is the potential of sales that this formulation that you've launched can bring in the Indian market? Do you have any competitors here? And at the same time, do you have any advantage? Because, you have the API for this tranexamic acid already. So does this help you further?
Yeah, good morning. Yes, as you said, that we manufactured the tranexamic acid. We were the first to manufacture tranexamic acid in India using the Japanese technology. What we have done is the tranexamic acid is known for stopping the blood. So what we have done it is the first time in the world we have made the spray, which can be very conveniently can be carried out anywhere. Especially, we have done this study on the dental. That is called as we have taken we call it as the Gyanadanta. That teeth, if you remove it, then the highest blood flow will come. We have done that study on 80 patients, and where the blood flow is stopped within 1.5 to 2 minutes. So what has happened in this will give us the new area where this can be used, especially in the quick hemostasis control, moderate to severe bleeding. Within the minutes, cuts,
but
then the puncture.
We take that point. We take that point, sir. We understand, that this will help in preventing immediate blood loss in situations which are, accident, etc., injury, etc. What we wanted to understand is that what is the revenue potential for this for you? What is the size of the market? And are there any competitors in a similar space here?
So the revenue is, frankly, there is no competition in this because this is made first time in the world. We have been protected by we have our own granted patent for this particular product. So the revenue potential all over the world, if you see, especially in the military, in the road accidents, you carry, because the majority accident happens and the death happens because of the excessive blood flow. Now, if you use this as a preliminary use, then the blood will stop and the person can reach to the hospital safely where this second treatment can be taken. Okay. So these uses all over the world it is there. So revenue potential, you can understand how big it is.
Okay. All right. Hi, Mr. Bhutada. Sir, that's about this, and hopefully it comes out. It'll be good for mankind, and in fact, it'll save many lives as well. Let's focus on your business, though. You have transferred your business, your API business, via slump sale to Shilpa Pharma Life Sciences. The street is waiting by and they're a little unclear on what you want to do with that. So will you be filing for an IPO? Because the problem is that will invite a holding company discount for the listed entity. Or are you going to bring a strategic investor into this particular entity? That's the API sales, which is bulk of your total sales number and almost all of your operating profit. Go ahead.
So coming, as you said, that we have been informed to everyone that what we are going to do with the API business, because the API business, we wanted to list it separately.
Yes.
This is the one option we have it. So we can get a strategic investor, we can get the IPO done. So there are various options because API being a flagship business of ours, we wanted to make it as a separate entity where the potential of a CDMO, polymer, peptide,
Correct. Absolutely, sir.
intermediates can be bringing that particular portfolio.
Yes, so it's got big potential, but what are you going to do with it? Is it going to be an IPO or is it going to be a strategic investor that's coming in and maybe look at an IPO at a later date?
So currently, I cannot comment on that. We have all options open. So probably we will see that the either IPO or this the strategic investor or anyone can come and join with us on this. But today, commenting on that will be very difficult.
I'll tell you why, sir, because the stock was at 600 rupees. There was a lot of hope that something's going to break. The problem is now we're nearing a 52-week low. So by when will the clarity emerge? By Q2 results, do you think you'll be able to tell your investors, or by Q3? Some timeline at least. It's in your hands what you want to, how you want to unlock value out here. But
Yeah, I think within 3 months, probably by December, we should be very clear on that.
All right. And by December, you'll be clear on the path of fundraising, right? Whether it's an IPO, whether it's a strategic investor or a mix of both.
Hopefully.
All right, take that point. As far as the business is concerned, you were looking to manufacture some of the intermediaries where there was a large import dependence from China. Have you moved on that? Are there any products that you've zeroed in on that you will manufacture?
Yes, of course. Shilpa being always working in a niche field. So we are trying to see that in the onco APIs, then going backward, some of the China plus one factor is also playing very important role. And what we are trying to do this now is which are the 100% imported material from the China on the intermediate. We are focusing such intermediate and trying to manufacture such by using the flow chemistry or any of our expertise using in that, including the fermentation.
So how much would that, mean in terms of an investment that you would take? Have you zeroed it on any products, specific APIs that you will be making? And by when does that start, impacting or flowing into your revenue stream?
Yeah, it's a big question. But anyway, as I've given the very short answer that we are working in a niche field. We are trying to see that how we can differentiate it with the others. Not only the manufacturing of the intermediate, which is totally dependent on the China, but on the API also, what best we can do it, where we can be competitive at any given stage. And of course, the import, again, the non-dependent on the import.
Okay. All right. What about the smaller part of your business, the formulations business? That's 25-26% of your total sales. That's profit making, right? So I remember a couple of years ago, it wasn't profit making. It's profit making now, right?
Yes.
Okay.
So formulation business will be a big business.
Right.
Yes.
There are hopes that things will ramp up, but the first quarter, I think it was impacted by, in Europe, they were impacted by sales. The US business as well was under pressure. It was supported by license fees. That's for your formulation business. So are things on the mend out here? If you could give us some clarity. To give you a couple of numbers, in the first quarter, you did roughly around 70 crores of sales in the formulations business. Will the run rate move up from here?
Yes, of course, the formulation, we are filing the 505B2, we are filing the several hybrid applications in the Europe, all part of the world, we are filing our various dossiers, which will ramp up. Whatever we have done the investment in the R&D for several years, 4 or 5 years, whatever we have done, that all effect. Now, recognizing our revenue with the licensing revenue, that itself vetted by the other peoples or the so-called big companies, because they will pay only licensing fees once they do thorough due diligence, and then only they will make such payment. So now what we are trying to do it for ourselves is recognizing that revenue also being the like API, then the formulation, biologics, these are all 3 divisions. We wanted to make it separate, and we wanted to see that each division takes off like a API division.
Right. What about the Jadcherala side? Because it's got a US FDA import alert for the last year and a half or so. What are your plans there? I mean, have you heard anything? And at the same time, what are you doing to, de-risk your business from just one plant in the US? Which is related to the US products?
No, as everybody knows, we are working closely with the FDA, and we have done majority of the remediation measures, whatever has been committed or suggested by the FDA, also called consultant, and we have submitted all this CAPA, OS handling, everything has been submitted to the FDA. FDA is almost, they have completed their review. We are waiting for whenever, the next, we have not heard last 1.5 months from them. But we are eagerly waiting that, they should do our inspection at our site, and we're ready for that.
For the time being, sir, whatever commentary you're giving, it seems the street likes it. As we speak, the stock is at the high point of the day. So it appears they want to know more from you. Let's focus on a couple of aspects then. One is margins. They got crushed in the first quarter because of various reasons. My question to you is, what is the steady state margins that you should be looking at for the company, the consolidated entity? If you could give us a broad number. And also in the biologics business, in this conversation, you've briefly spoken about it. I think you have clinical trials for 3 big products out there. By when do we see some kind of monetization, some kind of revenues that could potentially come in? Because you have the capacity, I believe, when you're waiting to fire on that front. Margins as well as on biologics. Go ahead.
So coming back on the biologics, that you have seen that the same philosophy has been put for the biologics also. We have created the excellent facility of the biologics, which has been vetted by the DRL, the Serum, Zydus, all have, wanted to work with us on their vaccine manufacturing. Unfortunately, that has been not taken place because of the pandemic was going down. But that has been, they have seen our facility and accepted that we have a capabilities of manufacturing this. The second one, what we have done, it is the adalimumab high concentration, which phase 3 data recently got approved. We were the only company in India who got high concentration approved.
Sir, you have mentioned some of this on your con call, and we take that point. Very, very important steps. But by when can you monetize it? As well as if you could tell us, margins will improve from here on. 2 quick data points. Go ahead.
See, the margins and the monetizations of each one is separate. The first important thing is you should get approval. Once you get the approvals, then you will get to market it. So we have now got this phase 3 data submitted to the drug control department. Hopefully, we should be able to get by November or December, we should be able to get the license to manufacture. And from the next quarter, means from the Q4 of financial year, we should be able to start the revenue generation from the adalimumab.
All right, Mr. Butera, thank you so much for joining in and giving us all those details. We would have liked a little more clarity on the margin outlook from here. But be that as it may, the street likes the prospects that you have laid out for the next 3 months at least, where you are expecting some sort of fundraise plan coming by for your pharma business in the next 3 months by December. And by December also you will start to launch the products that you got the phase 3 approvals for, and that will flow into your revenues as well. Importantly, the street will be eyeing what you plan to do with your pharma arm, etc., and the remediation of your Jacharala unit 2. The stock at the high point of trade. With that, we step into a short break, come back, get you more on the markets and individual stocks.
Strong market. Canfield Homes is lower after its MD and CEO resigned. Abhishek is joining in to run us through more details on that. Abhishek?
Well, MD and CEO of Canfield Homes, that is Mr. Girish Kousgi, has resigned on personal reasons. He'll be performing his duties till the relieving date has been set for him. Just to alert our viewers, his term was to end in September of 2024. Now, on 6th May, Canara Bank did mention to us that there are corporate governance issues that they see in Canfield Homes, and there were accounts which were identified as fraud. But, those amounts later on, they said, is under 4 crore. But this sudden resignation has caught the street, on a panicky mode, because the stock was down yesterday as well, and even in trade today, it was down as much as 7%. Jefferies has written on Canfield Homes. They have a buy rating with a target price of 730 per share. They say that Mr. Kousgi's resignation is a setback, and there is uncertainty around upcoming management change, which would be an overhang on the stock in the near term. Back to you.
All right, Abhishek, take that point. Yesterday, the open interest jump on Canfield Homes was 55% on the short side as well. So initially, we got that short covering. Thereafter, there was some unwinding, and then we see some more movement on the downside itself. Meanwhile, just keep an eye out on Piramal Enterprises. They've announced fundraising worth around 750 odd crores. And as a result of which that stock has rallied by about 3.5% as well. But let's shift focus to, or rather stay with NBFCs itself. Sources tell us that the RBI is not looking to allow NBFCs to issue credit cards currently. Lata joins in with the details. Lata.
Well, the fact of the matter is that the Reserve Bank is not considering this at the moment. Sources close to the central bank told us, and I'm quoting verbatim, this issue is not on the table right now. Now, it becomes important to clarify this because there has been market speculation that very strong NBFCs like Bajaj Finance may be allowed to issue their own credit cards. You know, at the moment, they are allowed to distribute credit cards of other banks like Bajaj Finance distributes RBL and DBS, but they distribute that only into the top metros, whereas Bajaj Finance lends in a lot of tier 2, tier 3, tier 4 companies. So if they're allowed to issue credit cards, they can really mine that depth, but it is not on the table. Now, the reason why the speculation in the minds of investors came in was because Reserve Bank issued a fresh set of master rules on credit cards on April 21st. And there in that was a sentence, without the prior approval of the Reserve Bank, NBFCs shall not issue debit cards, credit cards, charge cards, either physically or virtually. Now, this gave the impression that with the prior approval it is possible. However, when we asked these sources, they said it is a complete reiteration, a cut-paste of a rule that already existed, and nothing has changed, nothing fresh is on the table.
Thanks a lot for that, Lata. Well, for the time being, we'll wrap up on this edition. Our Chartbusters, you stay with us. Trading Hour comes up next.